Hey there, this is Chris Trapani, the Mortgage Pro. You are not used to seeing me like this. Hey, I'm just sitting in my dining room, which has become kind of my workstation command center. My wife doesn't like the look of it, but it is what it is. Like most of you, you're working out of your house or doing what you need to do. Well, I wanted to put together a video that kind of explains some of the things that are going on in the mortgage industry right now. There is, when it comes to government loans, which is FHA, USDA, and VA, there's definitely been a credit tightening. And what's happened is they've requested that all new loans basically have a higher FICO score. Right now, most lenders are going to a 640 FICO score. And even people with a 700 FICO score, I mean, they're doing the loans, but they're also lowering the debt ratio. So what happens is, if you have a 700 FICO score, just a couple of weeks ago, we'd get you in at, I don't know, 3 to 3.5, 2.75% with no points. I mean, it was incredible what was happening. But now it's not the same. For most companies, they're going to be charging points. A point is 1% loan origination of the loan amount. Some companies, are going to charge 3 points. It all depends. Is it a high balance program, which is over the conforming limit in your county? So things are definitely changing. At the same time, conforming loans, the not non-FHA, non-government, non-VA, the Fannie Mae and Freddie Mac loans are really, really going down in price. I mean, the interest rates are great in the mid threes to low threes, depending on your obviously FICO score. That's one of the most important factors, and your down payment. If you're purchasing a home, what percentage? The more you put down, the less the risk to the lender. Now, there are lots of things that are changing in the industry. For example, there's a lot of people who've been laid off. And this week, we expect millions more are going to be laid off tomorrow, which is Thursday, the April 2nd. And next week, I think there's going to be 5 or 10 million people that are going to be laid off, because now we've learned that, we're going to be here for another 30 days locked in. If that's your situation, that's what we're dealing with. So with that, there's going to be a very high default rate on the first payment. And the government loans are saying, oh, that's going to be really scary. So what they're doing is, again, government loans, they're starting to charge points and raise the rates. And look, there's nothing we can do about it, because lenders are not there to be nice guys. They're there to lend money. They make money by charging interest. Obviously, that's how banks make money. I do get a kick out of a lot of people who are wonderful people who call me up and say, hey, Chris, I want some of that 0% loan, because, the government lowered the rate to 0%. That's for when a bank lends money to another bank overnight. That's not for when you get a mortgage that you pay over 30 years. They couldn't make any money, obviously. They'd be losing money. So we need to look at all those things, what's happening in the mortgage industry. And conforming is fantastic. But the standards for buying are going up. Lenders are required to do more and need more as far as to ensure the safety of their company and their investors. So it just makes sense. If you were lending somebody money, you need to make sure that they're safe. So what's happening is lenders are putting a rule in place where, yes, they've sent a verification of employment form to your company. Yes, they've called up the human resource department and said, Harry works there. But the day they fund the loan, they're going to do it again. Why? Because maybe you got laid off yesterday. This is happening on a regular and continuing basis. And it's super important that you protect yourself and you protect them. So as lenders, we try and protect you as much as we can. Your real estate agent will protect you as much as they can, but the lender has to protect themselves and whoever it is that might be buying that note, to make sure you didn't get laid off yesterday when they're funding the loan today. So that's real important. Now, what do I see in the future? Well, there's down payment assistance programs. There's a lot of these programs. They're great programs. And, I've always told people, if you have the money, then don't go with a down payment assistance program. You get a lower interest rate. It's easier to qualify. You have more opportunities for more money, for better, basically a better loan if you put your own down payment. But look, some people don't have the money, so they require it on the down payment assistance. Well, they are going to be raising their standards. It wasn't too long ago, 640 FICO score, you can get all the money for the down payment, all the money for, a bunch of the money for closing costs. Sometimes we can get the seller to pay the rest of the closing costs. It was a great deal. Well, some of these government programs had lowered it from, we give you the whole down payment to a maximum of $10,000 unless you are a fireman or a school teacher. They're adding these extra layers of safety to themselves. Well, now with what's happening, to be honest, I expect those programs to just disappear altogether for a while. Now, the economy is going to get really rough. We're not going to enjoy what's going to happen. Everybody's going to take some kind of beating, I think. But when the government gets control, when we have control of what's happening with the coronavirus, when we come up with a vaccine, because we will, or when we come up with a treatment, we will. We just hope it's sooner rather than later, obviously. Not just for money, but for the health and concern and welfare of other people. But once we get control of that, what's going to happen is all these people who have been laid off are going back to work. As an example, there are 15 million people who work in the United States in the restaurant industry. That's a whole lot of people who have jobs. Well, think about this. If 15 million people got laid off, if every restaurant just shut down, and when we can all go back to work, guess what? Most of them, I'd say 90% of them, are going to go back to the same job. There's always going to be that 10% who are going to look elsewhere, and that's okay, that's great, upward and onward. But we have to look at those things and evaluate it and say, where is it getting us? Where is it going? All these people go back to work, and when that happens, the economy is going to start rolling. I mean, it's going to be like a train. You can't catch up. But right now, it's gone the other way. It's gone to a standstill. So it's been tough. What's going to happen at the end when everybody goes back to work? Look, the honest truth is, I think real estate is going to boom. Let me give you the reason why. When we were kids, we learned in school supply and demand. The rules of supply and demand are very basic, very simple. We learned it in 8th grade. When there's a small supply and a big demand, prices go up. When it's the other way, like it was 10 years ago, there was a big supply because of all the foreclosures and a very low demand. That's why real estate went down. Now, fast forward to today, there is still a huge demand for housing. People who want to buy, at least here in California, that's what we're seeing. People want to buy houses, and there are not enough houses for sale. So put that combination together, and when the economy is healthy again, when everybody's back to work, we're going to be in a great place. We're in an era of super low, ridiculous interest rates. I mean, it's crazy how low the interest rates are. We need to take advantage of these things right now, if possible. Now, it's not so easy to go and visit a house and buy a house right now. A lot of my friends are doing virtual tours online where you can see them and there's social distancing. Nobody else is in the house. So, there's different ways to do it, and they might be subject to you seeing the actual inside of the house, which maybe we could set it up where nobody's there and you just go in and do it. So we're working on all these things. The industry is aware, but the industry will be solid when we come roaring back from this. So if you have a question, if you have a concern, reach out to me. This is Chris the Mortgage Pro. I've been doing this for 29 years. Reach out to me. I will be happy. My people will be happy to help you. And if you're ready to buy a house and fire your landlord, just call me. Talk to you soon. Stay well. Stay safe. This is Chris the Mortgage Pro.